According to the International Monetary Fund, or IMF's measure of central government debt, the U.S. federal government is among the most indebted governments in the world. As of 2021, the federal debt reached 115% of our gross domestic product, or GDP. That puts us in 16th place out of 164 countries. Japan tops the ranking, followed by Greece, Sudan, Eritrea, and Singapore. Considering we are the world's reserve currency and not long ago the US was among the least indebted countries, in fact, just a little over 20 years ago, US federal debt was 42% of GDP, lower than debt levels found in 100 other countries. That data you see on your screen shows the US debt surged upward in two stages over the last 20 years. The first after the financial crisis of 2008, and then after the COVID-19 pandemic that began in 2020. Gross federal debt climbed to a record high of 128% of GDP in 2020. The recent downtick was primarily due to a surge in inflation, as well as real economic growth coming out of the pandemic, factors that temporarily reduced debt burden in many countries. Now that the debt ceiling has been taken out completely until 2024, we can expect more debt to come. Many are not discounting the possibility that our debt will go up by 50%, and this is if there is no economic disaster coming our way again. That is unlikely, though. The rapid increase is mainly due to population aging and the rising cost of Social Security and Medicare. The Congressional Budget Office, or CBO, forecasts that debt held by the public will grow from 97% last year to 118% in 2033, the highest level ever, and will continue to grow to 195% by 2053. We haven't even figured out the rising healthcare costs and interest rates contributing to even higher levels of debt. More than half of the federal budget by 2032 will be directed to healthcare costs and assistance to retirees, according to the CBO. Other countries are experiencing the same thing, like Japan and across Europe. There, too, pressure is rising on programs that promise benefits for an expanding pool of retirees, financed by taxes on a shrinking pool of workers. This dramatic increase in debt is not too far off now, and with the debt limit getting lifted, more money printing will follow. Remember that the increased spending was not financed by tax increases. It was financed by debt purchased by the Federal Reserve through money creation. To combat high inflation, the Federal Reserve has raised interest rates to the highest level in 16 years. That brute force method of slowing the economy through higher borrowing costs has thus far led to heavy losses for investors and several bank failures. High interest rates are also putting pressure on the federal budget, causing interest payments on the debt to crowd out other federal priorities and limiting the federal government's ability to respond to future crises. According to the CBO, the federal government's net interest cost will exceed $1 trillion annually by 2029, eclipsing the defense budget. The financial stress and instability of high interest rates are spreading around the globe, leading the IMF to recommend fiscal restraint as a less economically damaging way to reduce inflation and debt. Some of the most costly pandemic-era spending programs are still on, including student loan forgiveness that will add more than $400 billion to deficits over the next 10 years, according to the CBO. There's also the Inflation Reduction Act enacted last year. Meanwhile, Republicans and Democrats remain largely unwilling to address the growing cost of Social Security and the major healthcare programs. Noble Gold Investments encourages you to protect yourself, your family, and your future. Make sure you hedge against this economic disaster. Invest in gold with Noble Gold Investments. Gold is the one asset that is proven to withstand recession, inflation, and just about all economic threats. Noble Gold Investments is here to help you if you want to invest in gold. You'll also get a 24-karat quarter-ounce gold standard coin for free. Click the link in the description box to get started.